Hello, friends. Very good morning. Hope you are having a great morning. So, let us start with this top news. Now, first, let us start with the positive note. Now, our chief economic advisor, Mr. V. Ananantha, told that India is not in a phase of a stagflation. Now, what is a stagflation? Stagflation means an always in high inflation across the country, and also the demand is stagnant. It's not increasing. That is one of the meaning of stagflation. So, currently, he is saying that India is not in a phase of stagflation, and also India is among the major economy which is going faster than other countries. Correct. So Indian economy is doing far better compared to other developed countries and developing countries, which is the positive note. And India has a reserve of around USD 600 billion, which is acting as a big cushion. See, understand our currency is depreciating against USD dollar. Correct. But however, we have to get it depreciated. Reason is when the dollar is getting stronger and stronger, and if we don't get our currency depreciation, then there will be a problem in export problem. There will be a problem in export criteria, and that is why actually it's a normal tendency that we should depreciate our currency when the problem when there is a problem across the world, because we cannot be so strong against the world that now that will impact our export in a big way. So we have to consider all this stuff before talking about that why rupee is depreciating so much and why dollar is getting so stronger. But this is some of the things which will happen gradually as and when economy like US is go dollar yield there is increasing and everything is increasing, and also dollar is going back to developed countries. So that is why currency in India is almost depreciating because of the same reason. And there are chances it may go depreciate from here also. But however, if you take long term tenure, of course, dollar what is stronger currently, it will depreciate again, and then at that time currency, our Indian currency will go up. So that is a thing. So what Mr. Ananatha told that yes, in you we don't have to worry about India because India is in current better position currently. The even if you yesterday GDP data whatever it has come, maybe it is around 4.1% of the last quarter, but overall then also it is much performing much better compared to other countries. So that is a positive sign. Again, India per capita income is around 91,481, which is comparatively lower than the pre-COVID level. And what is the pre-COVID level? Around financial year 2000. So 2020, sorry, not 2000, 2020. So our per capita income at that time was better than what is there now. But you know that because of this last 2 years, because of the COVID crisis, the actually per capita income gone down, but now it is gradually coming up. So hopefully it will be better way from here for all the citizen of India, because at the end of the day the per capita income is the reflection what is going on in the economy. Again, the loan demand in April has picked up almost double, and it has reached to 11.3% compared to 4.7%. Now that shows that yes, people are taking loans for the economic activities. They are, because see at that what happened during the COVID times, people were not taking loan because there was no expansion there, and also demand was not there. Now slowly and gradually everything is coming back to normal, and that's why there is a demand in loan growth also, and which is a good sign because this shows that just economy is prospering. And of course high inflation is also one of that show indicator which shows the economy is going up. But the problem with inflation currently is that most of the inflation is due to high energy prices, which is the oil, or you can take metals and everything, and government is taking lot many steps to control that, but still they are not able to. But hopefully inflation will come into control once this oil crisis and everything will shuttle down. But oil prices also will shuttle down only when the geopolitical crisis, that is between Russia and Ukraine crisis, come to an end. So let's see what happens. Or if the OPEC countries are able to cover up the Russian oil deficit, which may be there, because you know that European countries leaders have decided they are going to cut import from Russia by 90%. So deficit, if the OPEC is able to cover, then there is no issue. Now, before I talk about global market, now just small recaps. I'm actually releasing this video every day. That is top news every day. And if you like this video, do click the like button. Also subscribe to my channel because it will give you a lot of motivation to provide you better content every day. Now talking about US market Dow Jones was down by 76 points, Nasdaq was down by 86 points, and Exchange Nifty currently, when I'm recording this video, is down by 73 points. Now the problem is what we are facing here is the crude oil, correct? Now, but crude oil has also actually cooled down to around 113 rupees because OPEC is saying that they are going to cover up whatever deficit will be there because of the sanction maybe levied by the European leaders that they are not going to import. So whatever deficit will be there, hopefully OPEC will cover. So that's why oil is coming down to 113. But now China is also opening now. And Shanghai city yesterday opened completely, and that shows that yes, demand in China will also increase. So that will put a pressure to oil from here because China, you know that now it's a big elephant. No, once economic activity in China starts going up, no, that create a big demand. So that is we have to see how oil will react from here. But the thing is, if oil goes below 100, provided it goes below 100, with the I don't see any near term it is going because the way demand is there and way the supply restriction is there. But if then it will be a big positive to India, and we will able to control our inflation. One of the way our government is trying to control inflation is that they are importing oil much more from Russia, and Russia we are getting that oil around $72 to $73, which is almost more than 30% discount what current price it is going on. So that is a positive thing, and that is the way we are trying to bring the inflation down. But we have to see how we are able to do it because so many factors are there. So many factors. Metal price is still not cooling off, but last few days there is one positive coming up that wheat prices has come down, and one of the reason is that Russia has allowed Ukraine to export wheat, which was lying on the godown in the near the seashore, to other countries wherever it need to go. Now that is a very positive because Ukraine is one of the largest exporter of wheat across world, and European countries are much more dependent on Ukraine to for this wheat production and everything. So if they are allowed, and actually they are allowing, that's a wheat price is almost, you can say that it is down by almost 15 to 20% from its size. So that's a positive, and that is why FMCG companies in India is doing well because of this fall in wheat price. You know that raw material prices has gone up a lot for all these FMCG company, and that's why their stock performance has come down, and their raw material prices rose by almost 50, more than 15 to 20%. However, they are trying to actually transferred it to the end consumer. But you also know that because of price electricity, no, they cannot transfer each and everything. So that's why currently what FMCG company is doing, they are trying to control cost and everything. Still, their performance is good comparatively, not so bad, even though such a high inflation was there. I'm talking about the profit margin side. However, stock prices has come down a lot. But once this oil and wheat prices and everything, raw material prices come down, no, there'll be a jump in profitability for FMCG company. But my recommendation is that if the FMCG companies from here or it goes down 10 to 15%, you can accumulate for the long term because everything is a cycle, correct? The cycle always changes, so better to buy when there is blood in the market, correct? Then you will have a good gain afterwards, maybe within 1 or 2 years also. Now yesterday FI sold around 1930 crores, and DI bought around 984 crores. Now, FMCG stock, which I told you that Russia-Ukraine crisis, whatever it happened, and because of this, so many things happened. And in that FMCG stock, I want to reiterate one point that FMCG stocks is like a cyclical in nature sometimes. Sometimes, normally it is not. But whenever this type of problem happens, for 1 or 2 years at least, they go for a downtrend. So before you buy, also as I told you, but keep this in mind that buy it in a you can say installment. Don't buy it one go because you don't know when this crisis will end. Talking about purchasing managers index, that is PMI index. Now that PMI index was margining down to by 54.6%. 54, sorry, marginally to 54.6 compared to 54.7 month back. Now that shows a small downtick in PMI. Then also Indian performance is much better because anything about 50, that shows a good sign. And in PMI parameters I'm talking about. So currently then also our expansion is there, our economic activity is going on very well. So let's hope this may rise in next few months. Now talking about auto sales number, no, all the auto sales came out with the auto sales number, and which was much better compared to the last year, month on month, if year on year comparison, if you see. But we cannot compare so because the reason last year almost most of due to the lockdown and everything, the supply side restriction was there. So many things were there, but now there is a pent up demand, and suddenly the people are buying more two wheelers than four wheelers and everything. So now there is a pandemic. So Eicher Motor done very well. They sold around 63,000 units compared to last year, which shows around 133% uptick. Similarly, Tata Motors, M&M, everyone has given a very good results. Basically, numbers compared to last year. Now, they are saying that yes, there is a possibility that this automobile sectors will do very well from here. Reason is that because of fall in oil prices, because of that excise cut, and again now raw material prices, that is steel and everything, slowly gradually coming down. So this will reduce their raw material costs, and from here there may be a good uptick from here. Now, what I think about the performance of stocks from here? Well, I think that currently where we are, it is not that our valuation is high, Indian market valuation is, but the thing is, most of the growth stock are still actually there at a high valuation. So you have to worry about the growth stocks. So before buying any growths, are better to buy gradually because still the global scenario is not so great. Of course, there are positive signs and green shoots coming, but unless this war stops and geopolitical crisis ends, does not seem that no, there'll be a smooth run. So basically, again, the inflation and everything we have to take into consider before jumping on the market with all our guns blazing. So better to buy slowly and gradually because market will give you ample of opportunity every time, and so we have to see when to buy because unless valuation goes, better to not jump and buy it. So guys, that is from my side for today. Hope you like this top news video, and do stay tuned every morning because I'm going to release this for you. And if you like this video, do click the like button, subscribe to my channel. I will see you soon tomorrow. Thank you.